Looking beyond the Magnificent Seven. Hello, everyone. I'm Patrick Fross with Fross and Fross Wealth Management. Right now, for the past several years, the Magnificent Seven have really done most of the heavy lifting for the market. But in 2026, that trend has reversed. The other 493 companies in the S&P 500 have gained an average of 13.93% as of June 24th when we put this chart together, while the Magnificent Seven have declined on average about 3.5%. We can see as we scroll through these different Mag 7 companies, they just haven't done nearly as well as they have in previous years. In fact, Microsoft, Meta, and Tesla as of June 24th were in negative territory, dragging down the performance of those 7 stocks as a whole. But this year, we've seen a big change. The other 493 stocks have done very, very well. This widening of market participation suggests that leadership is expanding beyond mega cap technology and into a broader set of opportunities across the market. For long-term investors, this reinforces the value of diversification and avoiding over-reliance on any single group of stocks. Really, the story for 2026 isn't that technology is disappearing. That's not it at all. It's that the rest of the market is finally joining the party. But there may be another reason. To understand what this is, we need to understand a little more about the AI cycle. This is a very important element. As we look at AI, and have you ever heard of AI? Of course you have. Probably more than you ever have in your life. We've heard so much of it. We constantly confront AI, whether it's on our phones using different programs and so on, but it's everywhere and there's no getting away from it. But there's different cycles, and experts have broken down the AI cycles into 3 basic phases. Phase 1 is create. That's where we have the picks and shovels and ChatGPT rolls out, and it's the old economy, recession, concentrated market leadership, which we've certainly seen that in the past. Phase 2 is catalyze. That's where we start to see data centers being built out, power grid investments, low hiring, low firing. We just mentioned that a moment ago. And of course, phase 3 is cascade, where we see this wide adoption of AI. We would suggest that we are in the second phase, which is catalyzed. We're seeing data centers being built, the grid needs updating, earning expectations are resetting higher, and we're in a low fire, low hire environment. We're also seeing relatively low adoption of AI, where about 20% of businesses report using AI applications. So we're really at the very beginning of AI adoption. And as we start to consider more companies adopt AI, we see efficiency start to pick up. We think it could hit the bottom line of the broad market and start to lift up some of these other AI technology companies as well. Now, let's zoom out from the Magnificent Seven a bit, and let's look at really growth, which a lot of those tech stocks are growth stocks, versus value as a whole, because we know growth has outperformed value for many years now. So which do you think is performing best year to date? Again, this is of 624. And there you go. The Russell 1000 growth up 1.4%. The Russell 1000 value up 15.5%. And although we've seen growth typically outperform value, we've seen this shift. Now, it doesn't mean that value will necessarily continue to outperform growth, but what it does mean is that the market can quickly shift and an asset class can fall out of favor while another gains momentum. No doubt as growth firms start to see profits start to grow as a result of AI adoption, we believe that those names will start to look attractive to investors again. Now, this is the forecast for the S&P 500. We bring this to you every year. I don't know why we bring it to you. It seems like they're wrong every single year. But this is the forecast. The experts were polled at the beginning of the year, and their average, if you take the average of all of their forecasts, they're forecasting about 10.69% for the S&P 500. And of course, we know that we're up, as I record this video, over 14% with 5 months left to go in the year. So we'll have to see how it shakes out. But right now, we are certainly exceeding expectations.